Okay, okay. So in this training video, I will walk you through step by step, on how to identify high probability trading setups. So this trading setups that I'm going to share with you are actually based on the trading, I would say the trading template that I just shared with you in the blog post. So if you're watching this video, if you have not read the blog post on the complete guide to finding high probability trading setups, then pause the video and go back to the blog post, and you realize that I've actually covered the trading template, all right, or trading plan that I use to identify high probability trading setups. So the first thing first, right, to find these kind of setups, you need a few things going for you. Number one is you need the trend. Number two, you need to identify the area of value. Number three, you need to have your entry trigger. Number four is your stop loss. And number five is, where you look to take your profits if you are right. So this is basically the framework that we are looking at to, enter the trade. So that's it. Let me walk you through a few trading examples on how you can do about it. So again, right, a very simple rule for me to define the trend is using the 200-day moving average or the 200 period moving average, depending on which time frame you're looking at. So if price is below the 200 period moving average, which is this black line over here, and the 200 period moving average is pointing lower, then I'll conclude that the trend is down. Right? This is a very simple definition I came up for myself in defining the trend, the long-term trend. So the next thing we want to look at is to identify areas of value, right? There are a few ways I identify areas of value. Number one is can be your classical support and resistance, right? Just your straight horizontal support and resistance. Number two is what I call the dynamic support and resistance, where it is defined using the 20 and 50 period moving average. So in this example, you can see this red line here is the 20 period moving average. The blue line here is the 50 period moving average. So you can see in this example, this is a dollar-yen daily time frame. The 20-50 period moving average, which is this over here, is currently acting as dynamic resistance. So this is an area of value for this particular product, right? The dollar-yen. So number one, we have the trend going for us. Number two, we have identified the area of value. Number three is the trigger. At this point in time, do you want to enter your trade? I don't think so, right? Because where is the area of value? The area of value is at this dynamic resistance over here. At this point in time, price is overextended, right? You want it to retrace higher back into this dynamic resistance before considering a short trade, right? So let's assume that price right now is at this dynamic resistance over here. So we have the trend with the area of value. Number three, what's three? The third thing is to look for an entry trigger. So entry trigger would differ from trader to trader. Some trader would wait for, reversal candlestick pattern, like, the pin bar or the engulfing pattern. Some traders are fine going short into this area of value. Some traders will just wait for a lower close. So entry trigger wise, all right, I would say it would differ from trader to trader, and you have to find something that, suits you, right? Something that you're comfortable with executing over and over again, right? So I'll leave it to you regarding the entry trigger. So what's the fourth thing? The fourth thing is to set your stop loss, right? So there are a few ways you can set your stop loss, right? You can either set it above the recent swing high. You can set it, for example, 2 times the average true range away from your entry. So there are a few ways for you to consider as well. And last but not least, the fifth thing is, how are you going to exit your trade if it goes in your favor? So again, right, there are a few ways you can exit your trade, right? You can exit your trade if, for example, at this swing low over here, taking a swing out of this market, or you can trail your trade, using moving average, in the hopes that you can, capture a trend. So these are the 5 steps procedure in identifying high probability trading setups. All right, this is what I use, and this is a framework that I use. Right, I hope you find it useful. So that's it. Let me walk you through a few more examples so you let the concept sink in. All right, shall we? So let's look at another one. Right, so this in fact, right, you don't even need to know what markets you're trading, and the principle can be applied the same. All right, you can trade it on any time frame. For example, this, I don't even want to tell you what market this is, but I tell you, right, this is the weekly time frame. Okay, so you can see it can be applied as well. Number one, define the trend. So how do I define the trend? The 200-day moving average has to be pointing higher. And if price is above it, then the market is in an uptrend, right? So number one, we've got it. Number two, what's number two? Identify the area of value. So at this point in time, historically, where is an area of value on this chart? You can see that this is an area of support, right? Area of value. All right, so we have it. The third thing is we're going to look for an entry. So where is the entry that we're looking for? At the area of value, right? So right now, price is not at the area of value. It's near resistance area. So you want it to retrace lower back into this area of value over here. Okay? And once you have it, you set your stop loss and plan your profit targets. As simple as it is. So in fact, if you look back historically, there was a potential opportunity here. You can see this one over here. If you look back, right, we have the trend with us, right? Number one, you have the trend, right? Pointing higher, 200-day moving average pointing higher, price is above it. Number two, area of value. We have it also, right? You can see area of support. Number three, entry trigger. Do we have it? Well, there is a false breakout over here, right? Adam Grimes call it the failure test, right? This is a legitimate entry trigger. You can go long, stop loss below this swing low over here, right? So you have entry trigger. Number four, this is your entry trigger. Number four is your stop loss below this swing low. And number five is a profit target. I would say taking profit at this swing high, you see, is a decent profit target to achieve, right? To target for. So you have all this going for you, right? And this is a pretty much a high probability trading setup, if you ask me. So at this point in time, right, you went in your favor and it looks pretty good, and you are probably out of this trade already if you are, if you took this trading setup. So okay, so I hope it really gives you an idea, right, to ground you in to understand, on how to find high probability trading setups. So shall we do one more example? Shall we? Yes or no? Yes, right? So let's do one more. So let's say, what else can we look for? How about this? Aussie yen, right? Aussie yen. Same principle, my friend. Again, what is the trend? Look at the 200-day moving average. Is pointing lower. Price is below it. Okay, the trend is down. Identify the area of value. At this point in time, right, it's not respecting the dynamic resistance. But it's respecting this area of resistance, this horizontal area of resistance. So this is our area of value. Number three, let price retrace back towards this area of value. Right? If it retraces, then you wait for an entry trigger. A pin bar, engulfing pattern, lower close, whatever you want is decided by you. The fourth thing you want is to set your stop loss, and the fifth thing is to set a profit target. Okay? So I hope this example in these videos are useful in helping you understand what are the things to look out for when you are trading the markets, right? Number one, just a brief recap. Number one, trend. Two, area of value. Three is the entry trigger. Four is your stop loss, and the fifth one is your targets, right? Where you're going to look for your profit targets. Okay? So with that, I wish you good luck and good trading. I'll talk to you soon.